Good afternoon. I'm Dr. Fasasi Kazim Adiola. Today we'll be looking at more illustration on bank reconciliation statement. This is the continuation from our previous lecture and previous video on bank reconciliation. And we said there are two books kept to reconcile. These books are bank statements prepared by the bank and cash book prepared by the customer. The process of reconciling the book kept by the customer, which is cash book, and the book kept by the bank, which is bank statement, is what we know as bank reconciliation statement. And we said there are factors that cause disagreement between the two books. Now, what are these factors? We said factor like unpresented check, uncredited check, dishonored check, bank charges, standing order, credit transfer, error by the bank, and error by the customer. In our previous video, we look at a comprehensive illustration and we solved the illustration, giving us the table of bank statement and the table of cash book. And at the end of the day, we prepare adjusted cash book and we prepare bank reconciliation statement. In the previous video, we said there are two different methods or approaches that we can use to solve illustration on bank reconciliation statement. We said there are indirect method. Under the indirect method, we have two accounts. One is bank adjusted cash book, and the second is a bank reconciliation statement. In the previous video, we look at illustration where there is bank statement as a table and there is cash book as a table, and we reconcile. But there are other ways in which examiner can examine the student on bank reconciliation without drawing table. Meaning the question is in theory format where there is no table. How do we tackle this kind of problem? And that is what we are looking at this afternoon. We have an illustration before us. Alamin Venture cash book show a debit balance of 5,000 naira, but this disagree with bank statement balance of 52,000 naira. On investigation, the following was discovered on 30th June 2020. On 5th June, check issued to supplier 30,000 naira was not presented for payment until 5th July 2020. Number two, on 8th June, bank charges of 2,000 naira was recorded only in the bank statement. Number three, on 15th June, standing order of 10,000 naira for monthly subscription was not recorded in the cash book. On the 20th June, a customer transferred 40,000 naira into Alamin's venture, but reflect only in the bank statement. On 28th June, check deposit by the account clerk, 5,000 and 6,000 was not credited by the bank. How do we prepare? They said we are required to prepare adjusted cash book, bank reconciliation statement as at 30th June 2020. Let's provide solution to this question. Solving this question, we'll put the name of the company, which is Alami Venture. And what are we going to do? We'll open our adjusted cash book. Debit, credit. This is adjusted cash book. Adjusted cash book for the month June 2020. Now, let's look at it. We're told that the cash book show a debit balance of 5,000. If we are saying the cash book show a debit balance, we'll come here, the balance BD, how much? 5,000 naira. That's the balance at the beginning. But sometimes the question can say the cash book. Please look at this. A question can say the cash book show an overdraft balance. Show an overdraft balance of 5,000. If you have question like this at the beginning, the word overdraft balance means the balance of the cash book should be on the credit side. The balance should the balance BD should be on the credit side. That's what it means. It means if we have this type of illustration, which is not in this question, if we have something like this, the balance will not be on debit side again. With this kind of statement, the balance, just because it's an overdraft balance, it means you put the balance on the credit side, 5,000. This is overdraft balance. But once the word overdraft is not there, they just say cash book balance. Cash book balance should be on debit. Or the question have said it clearly that you should put the balance on the debit side. But once a question said overdraft balance, you put the balance on credit side. But because this is not an overdraft balance, we don't have something like that in this question. Let's go back to our main question. They said the cash book show a debit balance. A debit balance means in that June, the balance BD is on the debit side. How much? 5,000. But what they are telling us in this question is that the balance in that cash book, in the original cash book, does not tally with the bank statement balance of 52,000. If this 5,000 as cash book balance, this adjusted cash book for the month, June. If adjusted cash book of this month does not tally with the bank statement, what they are telling you is this: the cash book prepared by Alami Venture show a balance of 5,000 with his bank, and his bank statement is showing that it has 52,000 naira. This disagreement can either be on the part of the customer who prepared this cash book or on the part of the bank who prepared the bank statement. Let's reconcile. On the first, on 5th June, check issued to a supplier, 30,000 naira, was not presented for payment until 5th July 2020. Meaning, this customer did not present this 30,000 naira at the end of June of that same month. And if this 30,000 naira is not presented to the bank as at 30th June, where this reconciliation is being done, that money become unpresented check. Unpresented check, which is number one, has nothing to do with adjusted cash book. It will be reconciled in the second requirement. Meaning, we have to jump number one. Please, students, note unpresented check are not recorded in the adjusted cash book, and that's why we are not recording number one. Two, on 8th June, bank charges of 2,000 naira was recorded only in the bank statement. If you look at it, there are two books, the cash book and the bank statement. But this statement is telling us that it was only recorded in the bank statement by the bank. It was omitted by the person who prepared the original what? Cash book. It means if it was only recorded in the bank statement, it's supposed to also be recorded in the cash book. But the statement is making us know that this 2,000 naira was not recorded in the cash book at all, that it was only recorded in the bank statement. How do we solve it? Now that it is not recorded in the cash book, you now help this customer to record it in the adjusted cash book, which is on June 8th. What was not recorded is bank charges. How much? 2,000. How do you know that these bank charges were to be recorded on the credit side? That is another thing. Once a customer paid for charges, paying charges mean outflow. Outflow means the customer is to put it on credit, while the bank is to put it on debit as withdrawal. Money is going out of. Now, outflow in the cash book was omitted. was omitted in what? The customer has paid charges, which is an outflow out of his account. Now, if he has paid charges and the bank has recorded it on the debit side, the customer is supposed to record it on the credit side, but it was omitted in the customer side. In that case, you put it on the credit side. That's the reason why if bank deducts charges from your account, bank will send you a debit SMS. Bank will send you a debit SMS telling you to update your own cash book on the credit side, but the customer did not record the account at all. Now that the customer did not record the account, we have helped the customer to credit it in the adjusted cash book. Now, that is one. Let's look at number 3. On 15 June, standing order of 10,000 naira for monthly subscription was not recorded in the cash book. That's another omission again in the part of the cash book. Standing order for monthly what? Subscription. Meaning there's another payment, which is monthly subscription on the 15th, and it was also omitted. We have to help the customer to record it. A standing order. And the standing order is 10,000 naira. That's another omission. What is standing order? Standing order is an instruction given to the bank by their customer to pay a certain amount of money on monthly basis. Meaning, it's an instruction the customer has given to the bank that every month pay a subscription of 10,000 on my behalf. And that means it's an outflow out of the customer's account. But it was not recorded in the cash book. What this is telling us is that the bank has fulfilled the standing order and they have debited, expecting the customer to credit. But in the original cash book that the customer prepared for the month of June, this standing order was omitted by the accountant. And now we have helped the customer to reinstate back this standing order that was earlier omitted in the original cash book. Now, let's look at number 4. On 20th June, a customer transferred 40,000 into Alamis Venture. That's an inflow into the customer's account, but reflect only in the bank statement. Once a customer transfer money into Alamis account, the bank is expected to record it on credit, and the bank will send a credit alert SMS to Alamis Venture, telling Alamis to update his cash book by putting it on the debit side, which is the corresponding entry. But we are told that it's only the bank that kept this record on their credit side. But the customer also omitted this. Now we are going to help the customer on June 20th. We call it credit transfer. How much is the credit transfer? 40,000 naira, which is also another omission on the part of the customer. After this, we look at number 5. On 28th June, check deposits by the account clerk, 5,000 and 6,000 naira, was not credited by the bank. This is what we call uncredited check. And mind you, uncredited check are not recorded in the adjusted cash book, as well as unpresented check. There are 2 items you don't record in the adjusted cash book. The unpresented check is not recorded in the adjusted cash book. And you may be asking me why. When they said unpresented check, it means a check that has been issued originally by the customer. And once a check is issued out by the customer has originally recorded it in the cash book on the credit side. But as at the time of reconciling, the customer discovered that the money that was earlier issued out was not recorded in the bank statement as a result of the supplier not presenting the check for payment, meaning it is already recorded in the original cash book, but the money does not reflect in the bank statement as a result of the supplier not presenting the check to the bank. In that case, it has no problem with the adjusted cash book again. And the uncredited check, once the check has been deposited, the accountant in charge of the cash book has already debited such check as an inflow into their account, expecting the bank to send a credit alert as corresponding entry. But no alert was received. Not until when the bank statement was received, we discovered that the bank omitted to credit such check. In that case, it has already been recorded on the debit side of the original cash book, but was not credited by the what? Bank. Now, anything that's earlier been recorded in the original cash book has nothing to do with adjusted cash book. That's why unpresented check are not recorded in the adjusted cash book, and also uncredited check are not recorded in the adjusted cash book. In that case, we are done with this adjusted cash book. All what we need is to balance the adjusted cash book. The debit side is 45,000, while the credit side is 12,000. Calculator, please help us. The debit side is 45,000. The credit side is 12,000. The lower side is always where we have the closing balance. On 30th, what do we have? Calculator. We have 33,000. Meaning, before now, the Alamin cash book is telling us that the cash book for the balance for the month of June is 5,000. But after adjusting the cash book by recording all the items that has been omitted by the customer, we discover that the original balance is supposed to be 33,000. But before we discovered this omission, the balance was 5,000. But after all the omission has been recorded back to the adjusted cash book, we now have the correct cash book balance, which is 33,000. Now, after this, we close our adjusted cash book, which is 45,000. 45,000. Now, this is requirement 1. Requirement A. These are requirement A. Now, our requirement B said we should prepare bank reconciliation statement. Let's put it this way. Let's complete the balance. Balance BD 33,000. Now, requirement B is telling us to prepare bank reconciliation statement as at 30th June 2020. Now let's pay attention. Now, this is the correct balance now. And this is what we call balance as per adjusted cash book. Balance as per adjusted cash book. The balance as per adjusted cash book, this is the original balance. Now let's go practical. If this is the cash book balance, there are money that has been issued out of the cash book to a supplier to present to the bank for payment, meaning there's an outflow. But this outflow, the payment was not presented to the bank, meaning naturally there's no withdrawal of that check. Now, if the check has not been withdrawn, it means the money is still within the account. What do? You add back. What it means is this: if any check is given to a supplier or to your beneficiary to withdraw out of your account, and that's an outflow, you have recorded it on the credit side of your original cash book, meaning there's a deduction. For example, if your cash book balance is 1 million naira, and you issue a check of 60,000 naira to your supplier as a result of service provided by that supplier. What it means is this: 100,000 balance on debit of your cash book. 60,000 check has been given out of 100. You're expected to have balance of 40,000. But till the end of the month, the supplier did not take that 60,000 naira check to the bank. And what it means is that the bank statement will still be reflecting a balance of 100,000 naira, while your own cash book will be reflecting a balance of 40,000 naira. How do you reconcile? So far, that 60,000 has not been withdrawn because of unpresented check, because the check has not been what? Presented. What you do is to add back your 60,000. In that case, from this explanation, we are going to add back our unpresented check. Check that was not presented as at 30th what? June. So far, the check has not been presented, no payment has been made. What you need to do in reconciliation is to add all those money back. Or check that in that month, payment has not been made for it. Those check has not been presented to the bank for payment. What you do in practice is to add all the check back. Why? The check has already been deducted from the original cash book. For reconciliation purpose, such check has not been paid out. In that case, you add all the check back. And how much is this check? The check is 30,000 naira, which is number one. The check as at 30th of June has not been presented, but it was later presented on 5th of what? July. But at the time of reconciliation, that check has not been presented. That's giving us 30,000 naira, meaning the cash book is having 63,000 naira. After this, all the check that has been deposited inflow in your own cash book, but the bank has not credited it in their own account. It has not been added to your account by the bank. What you do is to reverse. Reverse means if you have added it in your own before, what you do now is to what? Is to minus in order to cancel that check out. That is the reason why we need to less uncredited check. Meaning, if you are doing bank reconciliation statement, you said balance as per adjusted cash book. Add unpresented check or check not presented, add back. Unless all uncredited check. What are our uncredited check? Our uncredited check are two in number 5. We have 5,000 naira, and another uncredited check is what? 6,000 naira, giving us a total of 11,000. Calculator, help us. 63,000 minus 11,000. What do you have, calculator? Calculator is giving us 52,000 naira. This 52,000 balance as per adjusted cash book, add unpresented check 30,000 less uncredited check. What you arrive at is known as balance as per bank statement. Now, if our balance as per bank statement is 52, in the question 2 is 52, it shows you are correct. If the balance as this bank statement differs from the balance in the question, my advice is for you to detect where you make a mistake, or please move to another question in the exam hall. Thank you for this illustration. We'll be right back to give the last illustration on bank reconciliation statement. We're looking at the third illustration on bank reconciliation statement. And why? We want to look at the direct method. Under the direct method, no adjusted cash book is prepared. You just prepare bank reconciliation statement. This is the bank statement, and this is the cash book. Now, this is Alaska Venture. Alaska Venture. The only requirement using the direct method is to prepare bank reconciliation statement as at 30th September 2019. Now, how do we prepare this using the direct method without adjusted what? Cash book. We'll start with balance as per cash book. Is there already? 42,000. Balance as per cash book. Now, this is balance as per cash book. That is 42,000 naira. 42,000 naira. Look at where the balance carry down is. It's on the credit side. If this balance carry down fall on the debit side, what this figure means is balance as per cash book overdraft. Overdraft means you put this figure in brackets. It means there's an overdraft balance in the cash book. If the balance carry down is on debit, but the balance carry down is on credit side, meaning there's a normal balance to the debit side. That's normal balance. But if the balance carry down is on the credit side, the other balance, the balance BD will fall on the credit side. And once the balance BD fall on credit side, it is balance bank balance overdraft. Now, how do we do this? The first thing you are going to do, if you are using the direct method, is to put the word add. What are you going to add first? Is unpresented check. Unpresented check. How do you know unpresented check? That's the first thing. Unpresented check. What do? You check your cash book. That's what you are going to do. To get unpresented check, you check your cash book. What side are you checking? You check the credit side. Now, please check the credit side of your cash book, one after the other. And how do you know that there's uncredited check? What's this? Confirm it in your bank statement. Confirm it in your bank statement. If you have checked the credit side of your cash book and you confirm it on debit side of your bank statement, any item checked on the credit side of this cash book and is omitted on the debit side of the bank statement, it is unpresented check. Let's start one after the other. All the check going out but did not get to the bank is what we call unpresented check. And why? Because it has been deducted in the cash book, but it was not reported in the bank statement, meaning that money has not been withdrawn. If the money has not been withdrawn and it has been deducted, what you need to do is to add back. Because this balance here, we arrive at 42 after deducting all this credit side, expecting the bank also to deduct. Once bank did not deduct in the bank statements and you have deducted in your cash book, in that case, this balance is wrong because no money has been deducted in the bank. What do? You add back all those money that has not been deducted. And the reason why they have not been deducted is because those people you gave such check to has not present such check to the bank. The bank is not aware of such check. That's why it was not recorded in their bank statement, but it has been deducted in the cash book. If it has been deducted in the cash book, it will make the cash book balance to be reduced. For us to get the correct cash book balance, we add back all the check that has been sent out, but such check has not been presented for payment. If there's no payment, add them back. Let's check one after the other. Rent, 12,000. You see, I've confirmed it. I'm not checking the bank statement, I'm only confirming. I've checked a withdrawal, an outflow of 12,000, and the 12,000 is here. 10,000 was given to Akima, and Akima has gone to the bank. That's why you see it in the bank statement. Meaning, the 10,000 was withdrawn. 15,000 was given to Chika to withdraw because this is an outflow. When you credit it as an outflow, the bank will debit. Let's confirm whether Chika take this check to the bank. We have done our confirmation on debit side. There's no 15,000 naira. We don't have any 15,000 naira. Meaning the first unpresented check has been discovered. And that is a Chika. Chika, how much? 15,000. We also have Sandra. Sandra too was given a check outflow, but Sandra did not take the check to the bank. We'll look at all the debit side. There's no place Sandra, meaning Sandra did not take this check to the bank and it become unpresented check. Sandra did not present it to the bank. Meaning the customer, the owner of this cash will have deducted, expecting bank to what? To deduct. Bank did not see Sandra. In that case, there's no any deduction. In that case, if the customer has wrongly has deducted with the mind that Sandra will take the check to the what? To the bank. But on collecting this bank statement, there was no Sandra there, meaning that such money has not been paid out. What do? You add back. That's the second unpresented check, Sandra. How much? 6,000. Now, we have confirmed check that we have issued out but has not been taken to the bank for deduction. And so far, such check has not been deducted in the account of Alaska what? Venture. Alaska has decided to add back his money. Now, what are other things to be added is the second category. Second category is all inflow. All what? Inflow that has not been reported in the cash book. All inflow that has not been reported in the cash book. What I mean is that all inflow into the what? Bank. All inflow into the bank what? Statement, but has been omitted in the cash book. What is going to be added back to that cash book? Let's give for example. How do we do this? That's this number one. This is number two. All these explanations are those things to be added under the direct method. There are situations where a customer will transfer money into a customer's account, but due to network issue, the customer is not aware such money is in his account, not until when he receives his bank statement. That money constitutes an inflow, but it has not been reported in the what? Cash book as an inflow. And as an inflow, that money must be added back to the balance of the cash book. Now, how do we do that? We'll check all the credit side of the bank statement this time. That's number two. To get all the inflow, we'll check all the credit side. We'll check all the credit side of the bank statement. We'll check all the credit side of the bank statement. And where do we confirm it? We'll confirm it in the cash book. We'll confirm it in the cash book debit side. If we cannot find it, if it is found omitted, we'll add it. Let's start one by one. We have 30,000. We have 30,000. There's an inflow. The inflow was reported in the cash book. We have 20,000 dividends. We have 20,000 dividend received. But 20,000 dividend received on the 25 was not reported. There's 20,000 here, but it's not for dividend received. Was not reported in the what? Cash book. In that case, a company has paid a dividend into Alaska Venture account. But Alaska was not aware of such dividend, not until when he received his bank statement. Now that Alaska is aware of the 20,000 dividend received, he's going to add it back. This is an issue now. It was reported in the bank statement as an inflow, but it was not reported in the cash book as what? An inflow. meaning this balance is wrong. Because this balance, if it has been reported, this balance will have included this 20,000 naira, which will have made the balance to be 62,000. What do? All the inflow in the cash book that has been what? Omitted. All the inflow in the cash book that has been what? Omitted. Look at it. Inflow in the cash book that has been what? Omitted must be added back. Now let's add. We're also going to add dividend received. How much? 20,000. We're not done. We also have function. There's an inflow through function. Is there function there? Yes. No wala. And there's a standing order, a credit transfer of 40,000. The credit transfer is not here. Credit transfer means somebody has transferred 40,000 into Alaska's venture. But Alaska was not aware, not until when Alaska Venture received this bank statement. Now that it's aware, and it has not been recorded in his cash book, it shows that this 42,000 balance is wrong. Because if he has recorded this 42,000, the balance of 42,000 recorded in his cash book will have been more than 42,000. Now that he's aware, and it was omitted in the cash book, he has to add it back again, making 2. That is credit transfer. How much? 40,000. Now, we have checked the bank statement credit side. We have confirmed those items that are not on debit side, and we have added it to the cash book. Let's add it together, because after credit transfer that we also deducted, we also discover dividend received. These 2 are omitted in the inflow side of the cash book. And inflow side is an addition. If it is not added on the debit side here, it will be added in the reconciliation. What do we have? Calculator. 81. This is 60. This 60,000, 66,000, 66,000 plus 5,000, 71. This is 81,000. Please help us to add it to 42,000. What do we have? 123,000. Now we have added back. After adding, we are going to less. What are we lessing? We are going to less uncredited check. Why are we lessing uncredited check? Why are we lessing uncredited check? Number 2, we are looking at uncredited check. Check that has not been what? Credited. How do we know? We are going to check. Where are we checking? We are going to check all the credit side of our bank statement to get uncredited check. We'll check all the credit side of our bank statement from beginning to the end to see or to confirm it in the cash book. And where are we confirming it? We'll confirm it on debit side. The reason is this: cash book debit side is meant for deposit. If any check has been deposited and you check the bank statement, it must be on credit side. Credit side means the bank has recorded it. Now, how many check is in the debit side? Sorry, how many check is in the debit side of the cash book, but when confirming it, it's not on the credit side of the bank statement? Let's check. We'll check all the deposits in our cash book on debit side. And what are we checking for? We want to know and confirm whether the bank has a credit. We want to use it for confirmation. Now, we'll check all the debit side, all the deposits, to confirm it on the credit side. Why are we doing that? If there's any check that's been deposited, the customer have added, expecting the bank to add. If the bank has not recorded such check, it means that check has not been added. If the check has not been added and the customer has what? Added it on his debit side, the best thing in practice is for the customer to what? To reverse it. And how is he going to reverse it? If he has added it before and the bank has not added on their own part, what he's going to do is to come here and what? Less. It means that amount is inside here, but it has not been recorded by his bank. If it has not been recorded by his bank, let it deduct it from here as a sign of what? Reverse. Now, how many check has been deposited with the bank, but the bank has not added, but the customer has what? Added. The customer has to reverse by lessening the uncredited check. We will check all the debit side of the cash book to confirm it on the credit side of the what? Bank statement. If there's any item we confirm on the credit side and it is not found on the credit side of the bank statement, it means the bank has not credited, and that is why it is called uncredited check. Let's start one by one. We have balance of 20,000. The balance is there. There's no problem. We have check 112. I've checked check 112 on the cash book. Let me confirm whether it's on the corresponding of the credit side. Is there? We have Oye 20,000 on the 11/9/19. There's no any Oye on the credit side. It means the check of Oye was not credited by the bank. In that case, Oye should be deducted. That's the only check that was not credited. After we have done that, we'll look at all payments. This is number 2. What we want to look at all payments or charges. All payments or charges. All payments or charges that has been omitted in the cash book. All payment, all what they're supposed to have deduct that the cash book has omitted. How do we do that? We will check. This time we'll check our bank statement. That's opposite now. We'll first check our what? Cash book here, but here we are checking our bank statement. Where are we going to check? We'll check the debit side of the bank statement. Where are we going to confirm? We'll confirm it on the credit side of our cash book. That's opposite. Look at it, we are doing 2 things, 1 and 2, in case of what? Less. We'll first check for uncredited check. How do we check for uncredited check? We'll check our debit side of cash book and confirm on the credit side of bank statement. When we are done that, we'll also check for all payment that has been omitted in the cash book. How do we do that? We'll check all the payment that has been made through the bank and confirm it whether it has been deducted in the cash book. If it has not been deducted in the cash book, you deduct it in the reconciliation. Now, let's check. What are we checking? Debit side of our what? This is for withdrawal. If there's any withdrawal here, it must be payment on the credit side of the cash book. If the payment is not recorded, it has been what? Omitted. In that case, let's check. We have 12,000 withdrawal. It was used to pay for rent. We have payment of charges of 1,000. I've checked it. Charges is not here. It means the bank recorded the charges, but the customer forgets or omitted to record the charges on the credit side. Now, if this 1,000 has been recorded on this cash book, this balance won't have been 42,000. The balance will have been 41,000 because the customer will have deducted that 1,000 from this 40 before arriving at the balance. Now that it was omitted in the cash book and we were able to arrive at 42,000, in the reconciliation, you will now deduct. meaning there's a payment or charges, but it has been omitted. And if it's not omitted, it will have been deducted. What do? You deduct the charges. That's 1,000. We have discovered one. We'll be going like that. After that, we have Akima. Akima payment was reflected in the cash book. If it's not reflected in the cash book, we are going to deduct it. We have standing order of 5,000. The standing order is not there, meaning there's a payment of standing order 5,000, but it was not deducted in the cash book. What do? We remove the standing order because it was not deducted in the original cash book. If it has been deducted, this cash book balance would have been 42,000. How much is the standing order that was not deducted? That is 5,000. I think that's all, because once you check the last item, you are done. What are we doing? We are checking the debit side to confirm whether it is recorded on the credit side. If it is not recorded on the credit side, the payment side of the cash book, which is supposed to be less before arriving at the balance, we are going to less it during the reconciliation. What have we done here? We have checked all the check that was deposited, but bank has not recorded it on the credit side, which amounts to uncredited check. And what we have done, we have reversed it by lessening it. It has been previously added in the cash book. Now it has been deducted. So that this transaction is completely cancelled out in that month. And we have looked at all charges and payment through the what? Bank on debit side. Whether the owner of this account has recorded it in the cash book. If it has been omitted, it means that amount supposed to have been deducted, but it's not deducted. In the reconciliation, you will not deduct in order to arrive at a correct balance. What's the total here? 26,000. Now, these are what's supposed to have been deducted that we have deducted now. 123,000 minus 26,000. We have 97,000. This is what we call balance as per bank statement. And how much is this? 97,000. How much is the closing balance in the bank statement? 97,000. If you could not arrive at this same balance, it shows that you need to look at your workings clearly, and at the same time, if you still not discover the problem, you move to another question in an exam situation. At this junction, I have to say thanks to all our viewers, thanks to all our subscribers, and thanks to all the incoming subscribers too, because at this illustration, we have come to end of lecture series 1. In this lecture series 1, we have looked at introduction to bookkeeping and accounting. In the lecture series 1, we have looked at source documents. In the lecture series 1, we have looked at accounting process. In the lecture series 1, we have looked at users of accounting information. In the lecture series 1, we have looked at accounting concepts and convention. In the lecture series 1, we have looked at accounting cycle. In the lecture series 1, we have looked at capital expenditure and revenue expenditure. In lecture series 1, we have looked at accounting equation in details. In lecture series 1, we have looked at double entry bookkeeping. In lecture series 1, we have looked at trial balance. In lecture series 1, we have looked at books of accounts. Under books of accounts, we have looked at subsidiary book. Under the subsidiary book, we have looked at detailed illustration on sales day book, on purchases day book, on return inward book, on return outward book. Also under the subsidiary book, we have looked at cash book. Under cash book, we have looked at single column cash book, 2-column cash book, and 3-column cash book. Under the same lecture series 1, we have looked at petty cash book, and we have also looked at general journal, which cover all the subsidiary books. In this lecture series 1, we have looked at correction of bookkeeping errors part 1, which is error not affecting trial balance. Correction of bookkeeping error part 2, which is error affecting trial balance. Under the same lecture series 1, we have looked at bank reconciliation statement. We have looked at indirect method of preparing bank reconciliation question, and we have also concluded with direct method of preparing bank reconciliation. We really appreciate your views because your views is our strength. The more you look at this video, the more I'm happy. Why? It shows that knowledge is being passed. It shows that at least we are adding value to the development of humanity. We are adding value to the accounting profession. We are adding value to those who are inspiring to become chartered accountants in the future. This is the background. This is the foundation of accounting. You cannot be a chartered accountant without having an in-depth background of accounting. Moreover, if you don't even have the background to the introduction to accounting, why do you call yourself an accountant? When you don't know the meaning of debit and credit, when you don't know appropriate books to keep appropriate transaction in the business world, when you cannot discover error in your posting and correct such error before preparing the final account. Moreover, every organization has a bank account. Every organization expects the accountant to compare the cash book with the bank statement prepared by the bank in order to discover omission either on the part of the bank or on the part of the customer who owns the cash book, so that reconciliation can take place. With this, we have come to end of lecture series 1. We will be in our next video. We are going to start a complete lecture series 2. And the insight of our lecture series 2, watch out for the video. Thank you.